part of it I understand. 100,000 Bitcoin, diversified. But the part I think that's going to be different this year is that if Bitcoin makes a new high in January, there's no 4-year cycle.
Okay, so you don't believe in the 4-year cycle?
No. For those who are here and involved in crypto, I would say, without question, the best days are still ahead. So I'm like, even though it's felt horrible this year, I think crypto still has its best years ahead. If there is a super cycle, you never want to sell. So you could call that perma bull. I would be calling it right.
Tom Lee argues that some of today's pessimism originates from a demographic shift inside crypto itself. The original participants who entered the space in their 20s are now in their mid-30s. Their perception of excitement has changed. What they interpret as stagnation is often just the growing maturity of the ecosystem. According to Lee, the reality is very different. Crypto today is still in its infancy. One of his most striking data points highlights how early we still are. There are only about 4 million Bitcoin wallets globally that hold at least $10,000. In contrast, there are more than 900 million brokerage and pension accounts worldwide with the same level of assets. That ratio of 200 to 1 underscores how much future adoption remains unpriced.
Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space and drop your comments and observations in the comments section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks and enjoy the video.
This year, there are people who are starting to abandon crypto thinking it's not exciting anymore.
Right.
Or AI is a bigger story,
Always,
something else. But I'm seeing it at the conferences, and I realized it even now. What's probably happening in crypto is that there are these OGs, like the original people in crypto, and they were in their 20s, okay? But now they're 35. So the OGs are not young anymore. And so for them, crypto feels different because they're maturing and the industry is more mature. But if they take a step back, crypto is still in its infancy. I mean, it is a baby today because the best years are ahead. I talked about this yesterday. Like today, there's only 4 million Bitcoin wallets with $10,000 in it.
Interesting.
There's almost 900 million pension or brokerage accounts in the world that have over $10,000. That's 200 times the size, meaning more people have money in stocks or pensions than they own in Bitcoin. So it's still the earliest days. So there's a new wave of people that's going to find crypto, but the OGs think this is boring.
Yeah.
So it's not, so they have to just realize they're aging, and now and the industry still has all these new people to come in. That's what I think, how when you hear people talk about crypto being boring, it's because they've been doing it a long time. We've been writing and recommending both Bitcoin and Ethereum for the last 9 years, but we're leaning towards people allocating more heavily to Bitcoin because we just thought that digital gold was an easier narrative to explain to our clients. But now in 2025, I think digital gold and Bitcoin as store of values is well accepted. So there's less, in my mind, discovery of that argument.
Right.
I mean, it's still there's still a lot of virtues to Bitcoin. But when I look at the next 10 years, 15 years, we're a lot more excited about Ethereum than Bitcoin's future. I think Ethereum can still, and Bitcoin could have big moves between now and year end. So, but the reason to be excited about Ethereum is Wall Street is choosing to use the blockchain for the future. That's the big change.
Exactly.
It started with stable coins, and it was a big aha moment for Wall Street. But that's just tokenizing a dollar. And now Wall Street wants to tokenize everything.
Oh, yeah.
And they're not going to build it on Bitcoin.
No.
They need a smart contract platform. If it is a grassroots and people are building Wall Street in their garages, then any L1 will win. But if we want to look at who the institutional world wants to build upon, they don't want to build upon an experimental chain or a newly launched L1.
Yeah.
They want to build on something that, one, already has a huge community of support.
Absolutely.
That is 100% uptime.
Zero downtime.
Zero downtime. And they're not paying anybody to use their chain, which is where, so organically Ethereum is the place where all of this is being. Most people can't day trade because there's too much emotion involved.
I can't at all.
Yeah. So if I had to say what are people getting wrong with Ethereum, tokenization is this super cycle, this 5-10 year story, which means over the next 10 years from now, Ethereum is a completely different chain than it is today, monster sized. So today's price is discounting the next 10 years, right? Like imagine you're like looking with a telescope 10 years from now. So you're looking at something 1,000 miles away and you get there.
Yeah.
That's Ethereum's future. So the discount to the future is like, it's 1,000 miles away and you just took 5 steps.
Yeah.
It's still in the future. So Ethereum's price is not about what's happening today. It's about the future. And so they shouldn't expect the price to go up every day, but they should invest in that super cycle. And I think that what people get wrong is if you're discounting the future, Ethereum at 5,000 and Ethereum at 3,000, it's still got a $100,000 price in the future. And that difference in the price today is just a small variation in the discount rate. That's what people get wrong, is that they have to sit through the volatility. If there is a super cycle, you never want to sell. So you could call that permeable. I would be calling it right. And as you know, this year, people thought a lot of the OGs say we're in a 4-year cycle and Bitcoin's top.
Yes.
Okay. Now,
they've been selling Bitcoin like crazy.
Yeah. We've, part of it I understand, 100,000 Bitcoin, diversify. But the part I think that's going to be different this year is that if Bitcoin makes a new high in January, there's no 4-year cycle.
Okay, so you don't believe in the 4-year cycle?
No. I think we're.
So how come it's such a thing in crypto?
Because it was true in the past that there was a 4-year cycle.
Until this cycle.
Yeah. I can also point out that if you look in the traditional equity world, do you know that there was a 4-year cycle for ISM? ISM is the manufacturing index that had a 4-year cycle.
Interesting.
The 4-year cycle broke. It's no longer a 4-year cycle right now. And copper and gold prices used to have a 4-year cycle, and it's no longer a 4-year cycle. So if like things that were reliably 4-year cycles are no longer 4-year cycles, why should Bitcoin be in a 4-year cycle? Is my So, but we'll know. So by January 31, if Bitcoin closes at above 126
by January 31st,
then there's no 4-year cycle. 2026 should be terrible for crypto, right? That would be the 4-year cycle.
Yeah.
But our belief is that crypto is going to do really well next year because it's not about gold and digital gold and like Bitcoin being the flagship and the alts follow that cycle. It's really about tokenization. And that tokenization wave, and that's going to cause people to own and build and get excited about new products. That's going to be very important to price next year. So I think next year is a banner year for actual crypto building and therefore crypto prices. For those who are here and involved in crypto, I would say, without question, the best days are still ahead.
I love that.
So I'm like, even though it's felt horrible this year, I think crypto still has its best years ahead.
Tokenizing global finance means encoding assets that collectively represent hundreds of trillions, possibly quadrillions of dollars. No single chain can support the computational load of the entire global system. But Lee emphasizes that in any technological ecosystem, the top 2 or 3 platforms capture the overwhelming majority of economic value. Ethereum is likely to be one of these networks. Even if new L1s emerge to support specialized workloads, Ethereum remains, in his view, the most probable winner of the institutional adoption race.
When Ethereum's at 3,000, we love it. We're buying it. We're buying it hand over fist. I mean, we'll buy it all day. I'd rather be buying it at 3,000.
Of course.
So like in a sort of perverse way, and we point this out, it's a lot easier to get ETH at 3,000 than to pay 30,000. So like, if someone is an accumulator or something, and the market is handing you a price here, we love it.
Mm-hmm.
So it's not fun for people to ride through the volatility, but we have clients that, bought a lot of Bitcoin at under 1,000 and they made 100x on something that they literally never thought about. They put 2% in. And to us, when the S&P has its drawdowns, it's never fun.
No.
But we always just tell people, like, these are great companies. So if Nvidia is $86 and it was 150, is the story any different? And if it's not, they should be buying more at 86. And like, to me, is Ethereum at 3,000 somehow broken? There's nothing wrong with it. So we're glad to buy it here at these levels. They should just have two ways to price Ethereum in their head. Okay. One is, what is its price ratio to Bitcoin? That should make sense, because they're like, if you think Ethereum's story is getting better than Bitcoin, like there's more excitement or things happening, then its price ratio relative to Bitcoin should go up. I mean, it's sort of like, it would be like a relative price comparison. And that price ratio in the past was like 0.08. That's the average price of Ethereum to Bitcoin. Well, if someone thinks Bitcoin gets to 200,000, which I think it will, then Ethereum, just to get to its long-term average, is like 16,000.
Yeah.
Okay, and it's like 3,000 right now. Now, if Ethereum gets to the same value as Bitcoin, the network value, that's like 250,000. Which, could Ethereum be more valuable than Bitcoin in the future? Keep in mind, OpenAI is probably, if it was a publicly traded company, would be worth $1 trillion. And it's one of 4 or 5 LLMs. OpenAI just by itself is worth 3 times Ethereum right now. Is Ethereum more valuable in relative to AI? Right, OpenAI is just one of like 8 models. And if Ethereum is the dominant L1, shouldn't that be worth
more than
a couple trillion?
Couple trillion, yeah. No.
So that's why when I say 3,000 ETH, you're getting so much future optionality. In 2018, as crypto was crumbling, we didn't want to be like throwing in the towel on Bitcoin, but people thought we were being stubborn. But crypto came back huge. So in retrospect, that was probably more conviction than being stubborn. But really, no one will know at the time. I think one of the things that Fundstrat and the company I built, Fundstrat, which is now celebrating its 11th year of business, is that we do a lot of what we call evidence-based research. So we do our research, and it doesn't give us a crystal ball into the future, but it gives us the probabilistic outcome. And so like our belief on Ethereum isn't like, we're not being stubborn about it, but it's still the most probable outcome is that that's going to be the winning chain in the future. So the future of finance. If we tokenize the world, so gold is a $20 trillion market, okay? And that's Bitcoin is replacing gold.
Yes.
But when you add in stocks and bonds and real estate and intellectual property and art, you're not in the trillions, you're in the quadrillion. Right? So like the addressable market, let's say, is 100 or 200 times bigger. You can't fit that onto one blockchain. So in other words, like you in the practical reality is like Ethereum can't be the blockchain of the entire tokenized world. Because it would, like if you think about the computational requirements or whatever, everything would be running on one L1. So it makes sense that people are going to try to create chains that maybe bridge and talk to each other.
Also to make money.
Yeah. But I don't think of a world where the major L1 isn't still going to be the most valuable. Like in what they call, when you look at what they call market structure, the top 2 or 3 capture the majority of the economics. And I think that's what Ethereum is going to be. Actually, crypto is doing great.
Yeah.
Bitcoin was up almost 40%.
Yeah.
Ethereum was up more than that.
Yeah, we were living a great life. October 9th.
Yeah. So now October 9th is only like 2 months ago.
Yeah, I know.
So in 8 weeks, everyone's like suddenly like thinks they're dead.
No more debasement trade for crypto, right?
Yeah. Yeah. So what happened, of course, we know is that something happened on October 10th that we're only just recovering from. Because otherwise, October 9th, if we had closed the book there, it would have been a banner year for crypto.
So what did you mean though by that? Because you went viral for that. The software book. You know, what did you mean?
The glitch.
Was it the glitch? Was it because of the ADLs?
So ADL was like the portfolio insurance of the 87 crash, but ADL is not the problem.
I thought that's what happened to market makers.
Correct. But the ADL was triggered by what I consider a glitch, which was that there was a price grabbed for a stable coin that was based on an internal price.
Right.
Because that stable coin broke $1.
Yeah, it did.
But it didn't break $1.
It was an attack on that stable coin pretty much.
Yeah, and it didn't break on other exchanges. It was just one posted price. So in other words, that's why I call it a glitch, because if the pricing was a composite and said, look, this is an aberration. Like let's say that you were manually running liquidations and you weren't ADL, okay, and you saw that this thing went to 65, so it wiped out the collateral. But then you looked at the next exchange, it was still at $1. You would have said, hold the presses. Don't liquidate anybody. This is a glitch. It's really $1. The price is just messed up internally.
Yeah.
But because of Coda's law, that was the price, and it triggered ADL on one exchange, but then it triggered cascade liquidations everywhere else. Because you're selling you're selling positions that were in the money, but as that price falls on spot, it causes ADLs on other exchanges. That's why I think it's a glitch. But you know, then it won't happen again.
Lee is clear. Volatility is unpleasant, but deeply rational. Ethereum at 3,000 is not broken, just discounted. Bitcoin at 40% drawdown is not invalidated, just repriced. His firm, Fundstrat, is built on evidence-based research that assigns probabilities rather than predictions. Their probabilistic models continue to point to Ethereum and Bitcoin as high-likelihood long-term winners. He frequently reminds investors that the best long-term returns often emerge from moments when sentiment is exhausted. As an example, clients who bought Bitcoin under 1,000 and simply held generated 100x returns while barely thinking about it.